Let's compare gold and real estate. Which one is the best investment? An investment in gold is much more liquid than in real estate. You can sell a bullion within 1 hour, but you may need several months to sell a flat, especially if the market turns down. When you store gold, it does not produce any revenue. In contrast, a piece of real estate will produce a steady cash flow if you manage to rent it out correctly. You cannot expect this from the precious metal, and this may affect the return on investment on the long term. However, a property also generates costs, for example to maintain its level of standard. The price of gold is reported in real time on the internet. Therefore, you may feel it changes a lot. You cannot see the price of one specific property changing every second, so you can't feel how fast prices can move. However, real estate is often bought with leverage, and this increases the volatility. A market crash of real estate may force some homeowners to sell, and this would reinforce the crash. This is unlikely to happen with gold because it is usually not bought with leverage. So, a market downturn in gold would cause less damage than with real estate. You can follow the market price of your gold every day, but you can't do anything to add value to it. On the opposite, you may rehab your property and make it more attractive so that you can increase its value in a way that depends on you rather than on the market. Both asset classes are very unlikely to suffer a total loss because they are tangible assets. However, risks still exist, even without leverage. Gold can be stolen. If you don't pay enough attention to it while buying, your bullion can appear to be only fake gold. The physical structure of a building can be damaged, for instance, by an earthquake. As time flows, the structure of the building also goes bad, and it has to be rebuilt in average approximately every century. A huge and sudden demographic collapse can also put the value of a flat near to zero. This can be the consequence of a war or of an epidemic. We may expect that gold would survive more easily both events. If you have 100 grams of gold and you need to share it into two parts of 40 grams and 60 grams, it may not be so convenient, but it is at least possible. It also makes an investment with small amounts more affordable. Good luck if you try to trade the kitchen and one bedroom while keeping the bathroom and the living room. If you want to do so with real estate, you may consider investing in a real estate-based paper asset. As long as you pay for it cash and you keep it at home, no IRS or Finanzamt will know about the amount of gold you have. The effect of tax on real estate really depends on where you live and how you manage it. Sometimes it increases your taxable income and sometimes it reduces it. You may pack your gold in a suitcase and fly to another continent. Your property has to stay where it is even if you go away. Both gold and real estate require knowledge and know-how to make money seriously. However, real estate requires much more knowledge and in many more domains than gold. In real estate, if you miss something, your investment can really go bad. Once you have bought your gold, you don't need to know much about it to just keep it safe. File tax, find tenants, go to the owner meetings, manage your contractors, handle problems with the neighbors. Real estate requires work, and you mostly cannot decide when you do the whole work. So it does not offer much flexibility. Of course, you can have someone managing it for you, but then it costs you more. And you cannot always delegate negotiations. Gold does not have all of these problems and uncertainties, so it is more a kind of passive investment, whereas real estate is more active. As a commodity, gold usually reacts rapidly to inflation, and it is on the long run a good hedge against currency debasement. Real estate keeps pace on the long run, but it is also subjected to higher fluctuation when interest rates rise. On the very long run, gold keeps its purchasing power, whereas real estate must be repaired or even rebuilt. For stock market investors looking for a way to diversify, both real estate and gold are alternatives to be looked at. On this chart, the values of the MSCI World are compared with the values of gold. As you can see, the stock market has been much more volatile, especially between 1997 and 2013. But the MSCI World does not necessarily represent your portfolio. For example, during the tech bubble, internet companies went much stronger down in value than the MSCI average. Some of them went bankrupt, and as everyone was invested in these values, the portfolio of some standard investor went much deeper down than the MSCI World. So, gold is a very good hedge against crisis. Does real estate correlate with the stock market? Yes, it partially does, especially in some big international metropoles where big companies have their headquarters. There, the wages and the employment rate go well when companies go well, and this happens mainly when the stock market is up. For example, the real estate market in Munich is expensive as, for example, BMW, Siemens, Munich Rückversicherung, or the Deutsche Telekom hire many people here. However, if you consider alternative real estate markets, like holiday homes or land areas, then the correlation with the stock market may be around 0 or even negative. So it really depends on the unit you consider. Both asset classes have intrinsic value. However, what gives your tangible asset its value is very different. The value of gold exists because it does not perish and it is limited in quantity. The total amount of gold available in the world is about as big as a cube of 20 meters by 20 meters by 20 meters. Flats can be built, but it is a lot of work and space in the city centers is limited. So the rarity of available square meters gives real estate a part of its value, but it is not a determining factor. Much more is the usability determining for the value of real estate. The present value of the expected future rental income or using value is what gives flats and commercial properties most of their intrinsic value. What about you? Do you think real estate investors should buy gold?